Trade Pro FX here again, guys. Welcome back, guys. So today I want to show you that you can analyze using your mobile phone to do the analysis just using your mobile phone, not necessarily using a laptop. And this is a forex chart that I was analyzing. This is gold, guys. So after you see you open your chart on your trading view, but now I'm back testing using something we call go charting. So if you know you trade forex, it's the same concept. Whatever I will be showing you here is the same concept that you should use to trade the synthetic markets. The difference between the synthetic markets and the forex market is that the synthetic markets, one, they are not based on the real-time data compared to the forex market that is usually based on the current data and what trends, news, all those things that the economic things that are happening around the world normally influence how the markets of the forex normally move. But for the synthetic markets, it is not the same case as the forex. So I'll first come to my daily time frame, mark the highest point of the market, those candlesticks that the market has moved. So as you can see, I've marked the highest point and my lowest point, and that's on the daily time frame. So I'll shift now to the lower time frame to see how the market has been moving, and you can see it has been moving on an uptrend. That and knowing what is that, an uptrend is when the candlesticks, if you are using green candlesticks or blue candlesticks, it means that the market is creating, so something we said, it is creating higher highs, higher lows, and higher highs and higher lows. So with that, you can see on the daily time frame that we were, it was showing that we are on an uptrend. So coming back to the 4 hours, so I want to use the 4 hours to show you how to enter trades. First thing, when you just get into the 4 hours after marking your daily time frame upper and the lowest points that the market went, you will now mark the zones that the zones of area of interest. You can, whether you see a demand zone or a supply zone, all those zones. Like now here, I see a zone which is a demand zone. So there is a potential probability that the market will move to the upper side. And I must say that all these zones that one draws, you see traders drawing, they mean something in the market. So that zone that I have drawn there, that's a demand, meaning there is a possibility that this market will come back, touch that demand zone, and then that demand zone, and then proceed up. I understood. That means that anything you draw or do on your chart, just know there is a reason behind it. So that means what? That the market will, you see, it's now on a bearish. So I'm waiting for it to come back there. When it touches that zone, I know that now there is a possibility of moving to the upper side. Understood, guys? So after marking that demand zone, what is the work of a demand zone? It shows you that the market probability of breaking that market to the downside it will be so difficult to break that zone, but the market has to come back, touch that zone, and then proceed up. And remember, guys, we are using the 4 hour time frame, and you can see I've drawn for you there. So how to use those arrows which represent, you understand what I'm talking about. So I'll now move to the 1 hour to see whether there are some key zones that I can be sure of that this market now is going to move on my direction, which now I am waiting to take for buys. And how do I take these buys or rise market or upward market? I'm waiting for it to come back to that demand zone. And looking at the 1 hour again, I hope you can spot the demand zone, guys. You see this, let me mark the demand zone that I'm seeing here. So there is a section here on the 1 hour that shows this market. Again, on the 1 hour, it shows there is a demand zone that will make the market come back down. Then when it touches there, it will then move up. So considering that, let me draw it there. So there is a red candlestick there, you see. That's an potential. That's a key point that the market might come touch that zone and then retrieve up. So we are on the 1 hour time frame, guys. So next I will now move to an lower time frame. So what do I mean? You can adjust. Let me adjust these arrows so that you can see what I'm trying to mean. So whenever it reaches that point, I believe that market will come back to that point, then move up. Now I can consider entering a buy when it reaches that point and shows a possibility of now moving to the up direction. Whenever it just touches there, I can now take a long position over buy or rise or upward. So on the 15 minutes, look, on the 15 minutes, what do you identify? You see the market now, it's trying to come to that area of concern. So what do you note? So I'll come, let me pick my rectangular shape. Today I'll explain to you step by step how I normally take trades, both, and the same concept I've told you I normally use it to trade on DERIV trading and for the forex market. So there you can spot another demand zone, which is a key zone that the market might come there, touch that price, and then move up. And now this one can show you an entry point where you can place your stop loss and your take profit. So for me, I believe that it must come back. Despite that it has touched using that week, you can see the week wherever it is, it has touched that zone, that key zone there below. But I'll wait for it to come slightly inside that demand zone, so I can believe it will now get into the momentum of moving up. So I'll wait for a bullish candlestick to just form. As it forms and shows that now we can now move upwards, and then that's where you can enter a long trade. And a long trade meaning you will be purchasing, buy, rise, or you will take an uptrend. I'm saying all those things because you can also use the same concept to trade in DERIV trading. So with that knowledge, what do we expect from there? We are waiting the market to come back to those key zones, and when it returns to those key zones, I believe that the market will go up. So let me pick the long position so I can show you what I'm trying to mean. So there is the long position, I place it there. So and how will you be picking your take profit? You can slide behind on your left side, look the recent point, the highest higher low of that market, and that's the position you will put as the take profit. So there, that position is best for me to take a trade until that point. So that will be my first take profit one. And from there you can go on putting you are upgrading your positions at break even. So at buy now, I know that's the target I want for take profit one, and what is my stop loss just below the last. You can see as the uptrend was creating, it shows there is just a point, and you can see the market now have made the replay button. So I'll wait for that market till it touches my entry zone, and then I'll consider entering a buy. So that's how traders usually wait for the market. You see it touched, and now I can pick a great buy. You see it touched and went drastically up. I guess this was a time for news. It was a day which was based on news. That's why that candlestick went so large like that bullish candlestick. I bet this period of time was maybe on Friday for NFP CPI news. That's how it behaves, and from there if you saw that type of trade, you would have known now I could take a longer position to the upside, because also trading, you see, if maybe you are trading news and you see such an entry, you'll have picked a long position, because you know you are trading using the concept of also the big institutions are going to buy. So with that, now you have known that concept. So we are at 15 minutes and I have identified. What do you identify? You see there is a fair value gap now which has been created after that movement. So come back, go to the tools and now mark that fair value gap, since it will come to have an effect in this trading market. So let me draw for you that fair value gap, which we should now have an interest with it, because the market must come to fill something we call the inefficiency. So that space there which has been created, the market must come back to fill that space. So I'll place I might enter that trade from the center, between that fair value gap. You see there, between this fair value gap. So my phone is coming to an end, but no problem. Before it dies, so let's before it comes to an end, the battery is low. So what I was talking about is, I am waiting for that market to touch there, then move drastically up, and it must return. Why? Because I've seen this is a fair value gap. Understood? This is a fair value gap. According to me, I know that the market, whenever it moves up, it must return down, then pick that inefficiency, then proceed up. And with that, I'll now place my stop loss at the recent higher low of that market. So there. So let me place it well. That position should be the stop loss. So whenever that market maybe comes down, that will be my stop loss. But for my take profit, I'll now then move behind. Look at the previous. You can see if we broke that, we have won that. So I'll now, and looking behind, you can look at the previous higher high of the previous movement. But for now, with such a kind of trading, for you to scalp very quickly, just use that long position and pick your trade using the ratio 1:2. Understood? So for me, I'll take that trade whenever it returns back to that point. When you can see how it went up and down. So until this point, I will not have taken the trade. So let me zoom out. You can see very well. So as a trade, I will not have picked the trade until I wait it to reach there. And if it passes you, just leave the trade as it is and proceed looking for the entries on top. And you see the market touched that zone there and proceeded up. It came tried to fill that fair value gap and proceeded up. But for now, I guess that will be have passed that entry, and I will now focus on making to analyze using now going back to the first day. You can see I'm now back to 1 day. So then after seeing how the daily time frame is functioning, I go back to the 4 hours. So I want to again to take some trades again, because that one was a miss. That was the first miss that we have missed. So, and if that without a loss, you have missed that trade, the entry point, since it did not come down, it did not touch my entry point. So looking at this, we are on the 4-hour time frame. We are still seeing that we have a demand zone. So I'll now start picking trades using these 4-hour, the higher time frames. So let me start picking the trades using these higher time frames. It works very well, especially when analyzing using looking for the order blocks, fair value gaps, looking for all those requirements that are required to trade. So you see, on that, let me now start drawing and looking for some opportunities here. So after looking on this opportunity, so let me pick that rectangle. You see, this is a demand zone which was created there when we were waiting for that market to return back to the higher value gap on the 5 minutes. On the 5 minutes, I guess we are on the first 5 minutes. So you see, that's a demand zone, which means the market will move from wherever it is at 3543.916, return back to that zone, and then I pick a trade. Understood? Very simple. So I hope we have understood, all of us. So that's another zone of interest that I've drawn there. You can see it's also another zone of interest that you have to understand that might act as a zone of interest. So what do we expect the market to do? The market, we expect it to come back. You understand? I'm expecting that market to come back to these area zones and then shoot up, because we are still on an uptrend. So you see, my aim is waiting for that market to return to this zone and then move up. That's what I want to trade. You will say, well, trading, you trade what you see, not what you think. You trade what you see. So according to me, I see that this market, I wait for it to return to that zone, and then I will take a long position on the upper side, because we are still moving on along up on the upper side. And you see where I've placed my stop loss. My stop loss is just slightly below that zone there, so I'll just pick there. So where's my entry? There, exactly. So I'm waiting for that market to return back, and then I will use what? So let me just minimize that. So I'll take a position, and I'll look for the return risk ratio to be 1:3. And you can see the reason why I'm taking 1:3 is because I see a potential uptrend, and you see the market came back. I'm waiting for it to touch that zone exactly, and my entry point, waiting for a take profit. So we wait for the take profit. This is what we call swing trading, guys. So for scalpers, don't try this. Just if you know you are a swing trader, you wait until the market goes your direction. So it touched my zone, and I'm waiting for it to move and reach my target profit. So if you are you, would you have crossed that trade? No. Why? I see a zone which looks like a demand zone there below there. Let me draw it there. So that's a clear entry point. That's a clear direction that the market is still moving on the upside. So I won't worry. Let it reach that target profit. That target profit. If you had taken a position of and you see, we reached our take profit, and the market proceeded to move up after identifying that zone. I hope you understand what I'm doing. I'm first finding for key zones, then I wait for the market to return back, then I take up trade. That's what I'm doing. I mark my key zones, wait for the trade to come back to that zone, I pick a trade. And that's how we trade the forex market, knowing what you are doing. If there is no entry, just leave the trade as it is, guys. So looking at now this progress, we are making a higher, we are still moving on the up direction. So I will come back, look for a key zone there, and I have seen there is a certain zone here with a red candlestick. So it is an area of interest to me since we are trading on the 4-hour candlestick. So I'll just mark it. Yes, I said I'm using a mobile phone, so you'll just bear with me. And that's why I showed you that you can still do it. You can still analyze your markets using the same concept I'm doing. So I'll mark that zone. Let me press that rectangular shape very well. So what I was looking, before I draw that demand zone, I have come and seen that fair value gap. Do you see the first 3 candlesticks, the color green, green, green? The week of the first and the last, there is a space in between, creating a fair value gap. Understood? So with that, I can see a fair value gap. And what will I wait for that market to come back? It must fill this fair value gap. That inefficiency, we call it an inefficiency. That fair value gap must be filled by this market. So despite you seeing that 36, 35, the market probability is that it will come back and reach that zone, fill that fair value gap, despite that it is not that much big. So let's wait. I told you you trade what you see. So according to me, I would have waited for that market and see whether it will return back to my entry point, and now I will pick a trade whenever it would have returned to that zone. So let's wait and see whether the market came back. And if it did not come back, you just know that was not an entry for you to enter, and you continue proceeding to analyze the market. And you can see the market is still consolidating there on top. So I won't enter until the market reaches that area of concern, and it came to that area, tapped my fair value gap. Great. And now I will now pick a wrong position. From there, since I've seen it has now returned to my zone of interest exactly after. And remember guys, this is a 4 hours, so it's a period of waiting game. And you see it came, filled that area very well, touched my stop loss very slightly, and went now up very well. So let me see whether it will return back and stop me and take me out of that trade. So with that, I have seen that the market is at a good place and has come back to fill that fair value gap. As I told you, the market goes, it comes, leaves those inefficiencies and comes back, and then fills those inefficiencies and proceeds to the direction it was moving. So you see it touched that place, went now up. So I will be waiting for this market to do what? To reach my target profit. Understood? So after entering that market, you will wait for your target profit to be touched, and then you continue now analyzing. So there you can see there is a demand zone which has been created. There is a zone of interest. So it shows now, it gives me courage not to get out of that market. I cannot get out of that market because I believe it must touch my stop, my take profit. So I'll wait very well to reach my take profit, and I'm guaranteed because of seeing that now key zone. And what did the market do? After several hours, so I'll still wait again. It tried to retrieve behind, but I still hold my trade. So again it came back, filled that again, but now it had already filled that fair value gap. So you see the market almost went back to my stop loss. Again, I still hold those trades. That's why you hear people hold trades for almost a month, 2 weeks, since they have a good strategy in them and they know that the market direction will still reach to the point they had predicted. So you see, I'll just let me zoom out that wrong position so that we can see whether it will have touched my take profit. So I still wait, and it's days of waiting, guys. It's days of waiting. So we still wait whether it will reach my take profit and I get out of that market. And what did the market do? Let's see. So it almost touched my take. Good. Took out my take profit one after very many days of waiting, or hours of waiting. So after it hit my take profit, I see another zone there. It's a key zone. So if you look behind, you can see zones that are like demand zones, which are of area of interest. So first, let me draw what I'm seeing. So you see, that's a good point. So let me draw that zone, which is small there. So look at that zone. So with that, the knowledge we have learned, what do you expect? You expect the market to return to that zone back and then move up. But now what I want you to consider is this other zone there, down there. So as a trader, I will have waited for that zone to come back to that down zone level there, not the first one. I'll wait for that market to come back to the second one. If I miss that trade, no problem, because I want to be sure of what I'm doing. So let me show you using these arrows. I wait for that market to touch that zone, and then I can consider doing what? I can consider now entering the market. So let's wait and see what happened finally. Let's see what happened finally. And so let's wait and see. So I'll take a position whenever I see that, but for now, until it touches, and the market began to come back down. Let's see. You see? So let's wait. Let me first scroll and take a position, a long position of where I want to enter the trade, so you can know how people enter these trades. Just patience, having patience, and after analyzing and knowing what you are doing. So my phone is still coming to an end of the battery, so it still wait and see how it behaves. So don't worry. So you see this wrong position. I'm waiting for the market to come back to that position, guys. That's what I'm talking about. I won't wait for it to come back to that zone above this small the area key zone there. I'll wait for that market to come and place my stop loss just slightly below that higher low, and from there I'll be sure that the market will proceed up. So what did the market do? So and sure to always take your trades with a ratio 1:2 if you are not sure. So I'll set my take profit to ratio 1:2. You can see it's 2.4 to good 2.04, almost 2, exactly at that point. So I'll just wait for that market to come back, and remember, you are trading using 4 hours, guys. So it's very good profits. Don't forget, it's good profit. So you see the market started coming down. So if that market does not return to that position, you know that that is a missed entry. And the market, let's see, never came back to that zone. Okay, so let's see whether it came back. Okay, I'm waiting for that market to come to this zone to feel there's nothing which is being filled. It's just that it's coming to the zone of the demand zone, and you see the market slightly reached. You can see the market slightly reached. So for me, it would have passed me, because I would have waited for that market to come slightly down. I would have waited that market to slightly to come down, but it filled my first demand area, so you can see it filled it. So let's see how you see. And what do you note? Yes, let me draw that. So this was a fair value gap, so it came back. That's why I'm realizing now, it came back to fill this fair value gap, and it has filled already. Understood? It has already filled that fair value gap, guys. So I don't know whether it will come back to the area of interest of mine for the demand zone, but I see there was a fair value gap and it has come back to fill that zone. I never spotted that, guys. Always be very careful when analyzing, so you don't miss these entries. And it has already filled, so let me just put that horizontal line there very well. Let me remove that and check the last candlestick there. So I'll wait for my market to reach to that zone. If it doesn't, I won't enter that market. I'll go back to trade again. And you see it started consolidating very well on that zone, and not tapping my good. It has tapped, guys. It has tapped as I wished. And now take a long position for a buy. I never thought that it will come back, but it has now it has touched that zone that I wished to come and touch. So guys, from there, take an uptrend. That's how we do our analysis, guys. This is very easy, understanding these key zones. And the market now proceeded up. Let's see whether it proceeded up or it took me out of that trade. So I see my position, my stop position. So let me zoom it well, so as the market proceeds, but I don't think it will take me out. So that was my position, to my entry position. So I'm waiting for what? That market. Oh, it nearly tapped my stop loss. So I don't worry, I still hold my trade to make it to reach the take profit, guys. The market still was almost, I was on a drawdown. That means that I will be on a drawdown of losses, because immediately I saw that I would have entered that trade. So just holding the trade till it reaches my position, guys. And the direction changed to the up direction, continued to move to the upside, waiting for the target. Now I'm on profits. Waiting to reach to the take profit, guys. This is how we analyze using these strategies of knowing the key levels, and from there you can take positions. Good, waiting for good, and we took that take profit, and I exit that with a good profit. And now aim to check for other things. I can see spot a fair value gap, guys. Can you spot it with me? I told you, how do you spot a fair value gap? 3 candlesticks of the same color, and then you see a space in between the first and the last candlestick. That's a fair value gap. After scooping that take profit, we wait for the market to return to fill these inefficiencies. Despite how it is moving up, I won't trade until I see the market come to return to that zone. What else do I see? Another demand zone down there. Those are key levels on those red candlesticks. Those are zones of interest. Are we together, guys? I'm trading using the 4-hour candlestick. So I'll wait for the market to return to that zone, and then I can pick my trades from there. Understood, guys? I hope we are together in this trading. So don't mind the noise outside, but let's proceed. So how do I wait for that trade? I'll wait for that trade to return to my zone of interest, pick a long trade as we proceed on the up direction. So if it doesn't, I told you, leave it and wait for that trade to move as it wishes. So with that, the market came, tried to fill that inefficiency, as you can see, and let me now spot where I would have entered. I've entered. If I see the market touch my demand zone slightly, so let me pick the long position. So good, it has touched the demand zone. This rate, it is almost touching that demand zone. So what will I do? I'll just pick a long position for a buy position. So let me take that long position, guys. There, that's your entry. When you see a green candlestick start to form, so that's the entry. So whenever it touches inside, well, you can pick a trade. So let's see whether it obeyed our rules of checking the demand zones, the key zones to enter, the fair value gaps. And guys, you can see the market has touched my zone, and now I don't know whether I would have pressed my stop loss. It would have taken me out. I don't know whether it would have taken me out, but I see it has reached to my zone. And now I told you, how do you enter that trade? When you see the green formation of a candlestick that shows an uptrend, and you see the market literally went up but did not touch that take profit. I don't know whether it would have taken me off using the stop loss, but maybe it would not have reached the small pips. So let's see whether it would have reached my take profit, guys. So you see the market then consolidated so much. So I'll just increase that I'll just push the sideways that long position and see whether it will have reached that take profit, because obvious I see it reached to the demand zone, filled the fair value gap in inefficiency, and we wait for the market whether it will have proceeded on the upper direction. Again, this trade reached almost to my stop loss. So probably I guess it would have taken me out. This trade would have taken me out, but my strategy was correct, guys. I hope you can see, despite that you have a good strategy, some errors like this one, it can come back and mess you up, but you know what you are doing. What are you identifying, guys? There is a trend. There is a trend trying to be formed there, guys. And remember, this is 4 hours, guys. That's why I'm trying to draw that trend line. You remember I told you that most of these things that you learn online, they really work. Now I want you to look at this trend line. So what do I expect whenever that market moves up, touches the upper direction? So you see, now I would have changed directly. So I will either wait for that market to touch on top of that top of that trend line, then I take a sell position like that. You see, it has moved to the position on the downside. Understood? So the same trend lines, they usually work. Number 2, I will wait for a breakout on top of that trend line, and then I can now proceed moving up. But now, assuming I was on that trade, I would have taken a short trade if maybe I was taken out from the previous left side that we are talking about. So I'll still proceed to align the trend line with the most touches. And you see, whenever the market touches that angle of that trend line, either it turns down because it obeys the rules of those trend lines. You see, it has now again come back down. So whenever it breaks, I'll now try to fight for entries to take the upper direction. But now, looking at this, I would be making very short positions on the 4 hours for that trend line, and maybe take trades on my 5 minutes candlestick or using 15 minutes. And what ended up, it broke the trend line, and after breaking the trend line, what do you expect? The direction now to change to the up side. So I'll come back now, maybe trying to check whether there are zones to make this market to move up, but I know it has crossed that zone on that trend line. So I'll now try to look for positions to take an uptrend from here, guys. So by looking at it, at this trend line, guys, what do you see? What do you see? What do you see, guys? So you can also press your volume indicators to see how the market is moving, and I can see the buyers are still in position to hold buy trades, so they are more dominant in this market of gold. So let me first pick a rectangle and show you something I have noted. So as you trade, guys, always consider looking at these positions. It has broken out, guys. So I might take I will be tempted to take a position, but now what will be my take profit? That zone, you see the left zone, the higher low on the higher high on the left side, that one should be my take profit, my short take profit using this wrong position. So let's see what happened, whether the market went up, and what did the market how did the market go? It went after breaking that zone, tried to return back, but the trend line now, after breaking it, it could not allow it to come back. So let's see whether it hit that take profit, guys. Let's see whether it hit that take profit, and guys, let's see whether it hit that take profit, and as I had decided, and that's the area I'm telling you, that's the take profit. On your left side, you take the previous higher high or the highest point on the left side. So after the market went, so I'll still wait for this market to see whether it will hit, and you see that was a risk ratio of 1.55. So the market still went, still holding the buy positions. And what did the market do? Let's see whether it took our take profit, whether it hit our take profit, and I can see zones. I don't know whether that would be a take profit hit, but let's see whether it crossed on the upper side, guys. Let's see whether it crossed on the upper side using that candlestick. So these are 4 hours candlesticks, and this is what we call back testing, whether your strategy could have worked, and it worked. For me, it worked. That touched my take profit very well, and I exit that trade and proceed to continue making my analysis very well. So what do you see? An uptrend. An uptrend now is trying to be formed, and it's trying to form a trend line showing an uptrend. So now the market has continued its momentum to the upside. So guys, stay with me, and we still back test whether you would have entered this trade. Want to reach to the final place the market is currently. So after making that assumption, I'll have waited for the market to touch that trend line, then pick up buy position. So that's it, guys. So let's see whether after returning to the position of touching that trend line, and you see the market proceeded to the downside, it never touched that trend line for that case. So I still wait to see how it behaved. So not all times that the market behaves touches these trend lines, guys. That's why I was telling you should know how to enter these positions, also using the demand zones and fair value gaps. They normally show you the trend of that market. So if I knew, I would have seen. So I wait, it touches that trend line very well, so my patience would have made me take now a position to the upside, guys. So I told you I trade what I see. So for me, would have waited for that market to touch that trend line. And where is my stop loss? Just below. You see that, just below that lower low there. So let's see whether this market would have worked for us after observing the trend line for the second time. And where is my take position? There. That's my take profit. My take profit would be at that point, looking from the left side where the market has moved far to the farthest point. So, and the second take profit would be at that point. So let's see whether the market obeyed our rule. And I see that position on the lower side is not good. So yeah, that's where I would have entered the trade. Let's see whether I was taken out by this trade using my stop loss. So the market now at currently I would be on a I was on a drawdown, but now the market touched the take profit and won that trade after I saw the market tap that trend line. So looking again, you see it has created some demand zones there. So I'll mark those demand zones and extend well to that market using that trend line well. So let's see whether the market went according to our analysis. Guys, this is how you make your backtest. Go try to backtest any pair using go charting, and you will see whether your strategy works, and for the mine works. So I'll come look for demand zones or fair value gaps. So what have I noticed here? I am noticing that there is a zone there of interest, that position. So, and the market has breaked up that position. If you see, it has created a change of character, moving on the upside. Sorry, not a change of character, a break of structure. So what do I expect? I expect the market to come back to this area, which has some demand zones created, and then move up. So I'll come pick my rectangle shape. So I'll just draw. Let me draw that zone I'm interested. So whenever I see that market return to that zone, I will pick an uptrend. So for now, if you are a trader, what will you do? You will not have traded like me. I will not have traded. Whether you feel that entry, no problem. Whether the market goes up, no problem, because it has not obeyed my rule. And I told you, have one thing in mind. Don't be a prostitute of the market. What do I mean by saying that? Have a strategy that works for you. So guys, I would have waited that market to return to that point. So let's play that the replay button and see how the market behaved. So the market went up. Let's see whether it will have returned to my zone. So it went up. So let me first pick that rectangle. And guys, I hope you see this zone. Let me show you there. That's a zone of interest. That's a fair value gap that has been created there. It's very small. So probably this market must come back and maybe tap this zone. So we wait and see whether it will come back. And if it doesn't, you just know that's an entry. You will not have been trading during this time until your strategy hits as expected. So as for me, for that fair value gap, despite the smaller fair value gap it is, I know the market will come back to that point, feel that inefficiency, proceed up. And what did the market do? Came to that position. So if you were you, would you have taken a buy up a long position there? Would you? So for me, I will not have taken this position. Why? It has not reached to my expected condition. So let's see whether the market would have. If you took a trade using that, see it would have taken you out. But guys, just check, it has filled my fair value gap, and it would have taken you out. Just look, it would have taken you out, well, taking that position. Why? Because you enter that market without checking what you have done. So for me, I'll have waited until it reaches to this down level, that down level, that demand zone. So for a person who saw that small position and maybe took a buy, would have missed that trade. See now, it reached to the zone of interest, tapped my demand zone, went up. So that will be my entry now here. Do you see this price now? The market has come back. I told you the market, read your base, especially these order blocks. These order blocks and demand zones, they are very essential while trading. So what as a trader would I have done? Now I would have now taken my position for the buy position very well from wherever it is, since it has touched the area I wanted. Take a very good position for a buy position, guys. And I told you, wait, if your strategy is working, ensure you pick the right direction. So I would have taken the trade now from here, not from that point. From that area, someone would have maybe thought, let me take the trade since it has reached to the fair value gap. And what did the market do? Went up. Let's see whether it went up. So let me first show you. So assuming I took my trade now officially from there, what would I have targeted? Ratio 1:2 first, according to me. I would have targeted a ratio 1:2, and you see the market would have passed my trade from there. And then maybe if I wanted to place my order into the break even, that's what I would have done. But for now, just look here, there is a fair value gap which has been created. Number 2, there is a demand zone below which acts like an order block. Let me draw it. So what do I expect for that market to do? It must come back to that zone, fill that inefficiencies fair value gap, then it will reach to that order block and then proceed up. Understood, guys? So let me draw the order block and demand zone that I see there. So that's the so I don't know whether you see this red candlestick there. So I will wait for that market till it ever comes back to that position, and I take a buy position, guys. So what do you expect now? What is gold doing now? Because I guess we are currently at that zone. So if I'm not wrong, this market must come and touch this zone. So according to me, I'll wait for that market to return to that demand zone. Then I'll take a position for a buy position. So let me run and see how the market is behaving. So the market is moving now, trying to come back to this position. And guys, let's see. So it came back. It has not filled that inefficiency candlestick, that inefficiency fair value gap. And currently the market is on that position as we are speaking for this period of time of this video. And what am I telling you? For gold must come down, pick that, it must come and fill that inefficiency, that one. And then for me to take a trade, I'll wait for that market to return to that zone and I take a buy position. So currently, if you are trading, just know the market must come back to fill that inefficiency. So with that, guys, we have done a full complete guide of trading forex. The same concept, use it to trade DERIV trading, guys. So I hope it will help someone understand how to enter trades. So for this position now, I am not trading gold until it obeys my rule of coming back to that position. Then I'll take a buy. So for those who are trading now, you can pick your sell because it must return to this inefficiency. So let's wait and see how gold behaves from now. Since you know that, let me have your comments below.